So let's first talk about our fixed income markets, Bankole. We're seeing stability in the secondary market despite a tightness of liquidity in our money markets. Now, liquidity has dried up as we saw liquidity did dry up as we saw federal allocations coming in, but we also saw the market was already in huge debit. Actually, you said going into this month, the system is still in a debit of over 100 billion naira. Now, how quickly do you think we will see the market get liquid again?
We are not expecting liquidity pretty soon. We're looking at upper week. The last inflows we had from the federal allocations were on the 26th of last month, which is just a few days ago. But basically in the fixed income market, what we've seen is demand has risen. Despite this illiquidity, we've seen drop in yields, which are marginal. But I must confess that there's been a huge drop in the yield of the 27th of June bills maturity. That's the 1 year bills maturity. Effective yield on that particular maturity was over 17%. And it looks like at that point it's still very attractive for PFAs and individual customers. It was issued in the primary market recently, but even in the secondary market it's been very active. The yield has dropped from 15.2, that's the discount rate at the secondary market has traded, has dropped from 15.2 to about 14.55 levels, which is a very significant drop. The most significant drop we've seen in the last 7 days in the fixed income market. For all other maturities from short-term to the long-term bond securities, we've seen a drop of about 10 to 20 basis points, basically, not more than that. So that's it. Despite illiquidity, we've seen attraction or the appetite for 1 year T-bills maturity.
Well, but Bankole, despite this illiquidity that we're seeing in our markets, investors are still holding on to their high-yield securities. Now, why are they so hesitant to sell? And of course, what moves do you expect to see from investors?
Yes, there will be opportunities if the FDIs come back in. If it becomes clearer that there are no major risk, in Nigeria, we've seen people sell down to take their funds first, safety first. We would see FDIs come back in, and basically what can happen is that if yields drop, your positions, held at 15.5 and 16% levels in discount rate, will then be profitable to sell. So what we've seen in the last 2 weeks is that rates were stable. In fact, we saw rise in yields, which made it difficult for people to sell down. But with demand coming in, even in this illiquid period, there's potential for more profits to be made. So you rather hold on a bit more. Compared to your cost of funding, it's still a positive spread. So basically, you just hold on and see if FDIs will come in or system will become more liquid. And then this will drive demand. That's the expectation of most counterparties, basically.
Well, Bankole, let's turn our attention to the currency. Of course, we've seen the naira in the last 2 weeks gain about 2 naira against the dollar from around 162.75 to 160.65. Of course, today we saw it close at 160.90. Now, many reasons given, one of them that Union Bank investors sort of brought naira into the market. But I'd like to ask, we've seen the CBN intervening at the WDAS auction with about 300 million constantly in the last 2 weeks. However, we still continue to see our foreign reserves decreasing. What does this mean for the outlook on the naira? What does it mean for your outlook on the naira?
Okay, my outlook of the naira basically is stability for now. But if we see this stability go on without major fluctuations or volatility, what would happen is that people who have dollar stock, that blue chip companies and other conglomerates who earn foreign currencies will probably sell down at this rate. It closed at 160.90, as you said. It actually touched 160.59. It shows that it could go to 160 levels or 159.9 levels next week if oil companies, like NNPC, who is the most major of the sellers, come into the market. So there's potential for a drop. That's revaluation for naira. But there's the real demand there too. We see people coming to buy at strike rates. I'll call that strike rate. When dollar gets to certain levels below, at around 160 and below 160, you see people buying in and the demand, kicks in. So basically, it's going to be, a tussle between those who demand and supply, basically. But stability is what I see in the next few weeks.
Very interesting. Bankole stability is what you see in the next few weeks. But thank you so much for joining us. That was Bankole Odusanya, fixed income trader with UBA.